The euro was lifted mildly as Eurozone finance ministers finally reached an agreement on Greece's fiscal consolidation and agreed that the disbursement of the next tranche of bailout funds would be done on December 13. Euro-US dollar briefly breached the 1.3 psychological level, but there isn't enough follow-through buying yet. Other European majors also followed and were mildly firmer against the dollar. The Greek deal also gave a mild boost to Asian equities, and risk appetite lifted Australian dollar-US dollar through near-term resistance of 1.0480. The agreement reached by EU finance ministers includes a plan for Greece to lower its debt to 124% of gross domestic product by 2020 and below 110% by 2022. This was in contrast with the IMF's request of 120% by 2020, a reduction of interest rates by 100 base points on Greek debt, and an extension of the maturities of loans for 15 years from other countries and the Eurozone's bailout fund, the European Financial Stability Facility, and a deferral of interest payments by Greece on loans of 10 years. The decision was welcomed by Eurozone's officials. ECB President Mario Draghi believed that it will certainly reduce the uncertainty and strengthen confidence in Europe and in Greece. Luxembourg's Prime Minister Juncker stated that he strongly believed in the Greek capacity to recover. The Greek people are courageous people. They are willing to bring their country back on the path of growth. It was surprising that Mark Carney will succeed Mervyn King as the Bank of England's governor from July 2013. It is difficult to predict the outlook of the monetary policy in the central bank under Carney. Paul Tucker was originally tipped as the leading candidate for the post. But it's reported that the LIBOR scandal had undermined his bid and eventually caused him this top post. Yet, Carney has been regarded as an innovative, policy pragmatist. For instance, Carney as the head of the Bank of Canada introduced the conditional rate commitment in 2009. It was the first G7 central bank to have made such an arrangement. It's reasonable to forecast that the Bank of England would be more aggressive in quantitative easing implementation under Carney, although he only has one vote, after all. On the data front, New Zealand trade deficit came in wider than expected at $718 million New Zealand dollars in October. Reserve Bank of New Zealand inflation expectations were at 2.3% quarter-on-quarter in Q3. Japan's corporate service price index dropped 0.7% year-on-year in October. German